Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right, so we're talking Affirm. It's had a pretty good 12-month run, up about 75%. Are we starting to see any dispersion, maybe a consumer getting affected where they're not buying anything, or maybe they're using buy now, pay later more?
Yeah, that's actually the case. I mean, when you look at credit card debt, we're at all-time highs as a nation, 1.09 trillion. We've got 22% rejection rates on new credit, and 55% of Americans say they're using some sort of buy now, pay later. So this is like the next level of credit, right? So if you're really stretched thin and you're unable to get more credit, you're maxed out, then you're doing buy now, pay later, which says a lot about the American consumer, but Affirm's going to make some money on it. So I like their position here. And you talk about the stock, yeah, it's on quite a run, but depending on which investor you ask, they might be disappointed that it's went from low 80s to mid 50s over the last little bit, even though it was 22 back in July. So it's kind of like Shopify, where it was way lower before, but it was also higher than it was now. So depending on the outlook of the investor, they could be frustrated or very happy right now. We know that again, the buy now pay later is a trend that's continuing to pick up steam, and I don't think that the tightness in the American economy or the consumer confidence is going to hurt this company. I think it's going to help because as you start to struggle a little bit more, to get credit or to spend what you need to spend, you're going to go to buy now, pay later, and that's evident by a lot of the data that we see. So when you look at them versus some of the competition, the difference is actually pretty staggering. I mean, they are the dominant player here. You can look at all of the competition that they've got. Which one of these companies do you want to be invested in? Obviously, the plus 20 over the negatives. And so the fact that they've got web visits, up 20% year over year. Their active customers are plus 23% year over year. They just posted last time they posted their fourth quarter of consumer growth, fourth consecutive growth quarter for growing consumers. And the mind share chart is amazing. So when you look at what people are talking about, the web visits, the social media mentions, Affirm is at 47%, and a year ago it was at 40%. So even though they're the leader, they're continuing to eat away at the competition and grow their position in this. So they're doing really well. And I think a lot of it has to do with their model. I mean, I think they're smart about the way that they do things. They're actively underwriting in real time on these loans, and they're doing it on larger purchases. So they're looking at travel, electronics, things like that. Whereas some of the other competition, they're much smaller purchases, and it's a $150 purchase you can pay over 4 payments. Whereas Affirm is saying you want to take that trip, or you want to buy that very expensive electronics package, TV, whatever it might be, we got you. So they're making money from interest. They're making money from the merchant fees because people are able to buy where they wouldn't be before. Just overall, I think that they're separating themselves through not only the type of loans that they're giving out, but also the fact that they're very transparent. They don't have any hidden fees. So when you interact with them, you know what you're getting into, right? I mean, you're tight on money already. You don't need the added stress, and you're just saying, okay, here's an option for me. I think things are going to pick up financially, so I'll go ahead and do this buy now, pay later. I know everything that I'm getting into. And then once you have that positive experience, you're coming back to them next time for that. So they're doing really well with consumer happiness. They're doing well with growing user base, and I think that their model works right now. So we like this company where it's at. We like the fact that the price is pulled down again from low 80s to mid 50s heading into earnings. So I think we're in a good spot with Affirm here.
Landon, when buy now, pay later jumped onto the scene, everyone thought it was kind of a trendy thing that was a flash in the pan, and some of the actions, appeared like that was happening, right? It looked like it was going to be a flash in the pan that died out, but they've settled in here to some nice growth and some nice businesses. The expected buy now, pay later expected to reach $77 billion market by 2033. That's a 17% annual growth. Affirm has 21 million active users. So this is a real company now doing real things, and all that flash, and they thought it would just remember a couple firms got in it and then got out of it and got rid of the businesses, and now this is kind of settled in. It just may not have as many players as we thought, but Affirm seemed to have figured out the way to do this, and they're settled into pretty nice growth here.
Right, and you know what's interesting? I mean, if you think about what the concept of buy now, pay later is, it's really the same thing as a credit card. I mean, a credit card is just saying, all right, we trust you, go buy whatever you want up to this amount, and you'll buy now and you'll pay us later. Well, this is just on a transaction by transaction basis instead of a credit limit basis. And so it's a very similar concept, and I think a lot of people are starting to pick up on that. And there's, I think there maybe was a stigma that is maybe still there with buy now, pay later, but it's reducing, right? It's not that big of a deal, and I think that more and more people are getting more comfortable with it, either out of the realization of this is basically a one-time purchase credit card, or out of necessity. I mean, we're seeing data that shows that it's moving from discretionary purchases to essential purchases. Again, which speaks to what's going on right now with the American consumers' confidence levels. It's low, but yeah, I think that it's just an extension of the credit card concept, just boiled down to the micro level where it's transaction by transaction. And this could be an alternative to credit cards for a lot of people. And I think that they've kind of found their sweet spot in this growing trend, and they're the clear leader. So again, this company was $22, and then it's $82, and now it's $55. I think they're headed higher. I think they've got a good market position. They're growing. They're beating their competition. They are the leader, and they're expanding that lead right now, which is really attractive. So it's going to be interesting to see how this shakes out over this earnings call. But we're expecting good numbers from them.
Yeah, Landon, you mentioned competition and some of the other players in this space. Klarna put off their IPO, but they're still going to go public. They took Walmart away from Affirm, and that comes out later this year. That was 5% of their GMV, on their last quarter. Is that going to be, an issue moving forward, or is the pie just continuing to grow? And as long as you're one of the leaders in this space, that's going to help you down the road.
Well, yeah, I mean, obviously it's going to hurt. For investors that are looking to trade this, if it's known, though, it's baked in already, so that's good. But the pie is definitely continuing to grow, and they're continuing to eat a bigger piece of that pie, which is, it's a win-win. That's what you want. You want the best ship, and when the rising tide lifts all boats, but you want the best boat. So that's where Affirm is right now. Buy now, pay later is a strong trend that, again, Kevin, I'll agree with you. I thought it was kind of like, I don't know about this, right? This is this layaway. What is this? Like this, it didn't resonate with me, but as we looked at the data over time, it just continued to grow and grow and grow. And I think that, as things get tight, people continue to use it. Now, it's going to be interesting to see, just like with every company, tariffs are a headwind. So what's going to happen there? What are they going to talk about on this earnings call? How is that going to affect things? But the tighter things become to a point for consumers, the more they're going to lean on buy now, pay later. So this is almost like they want a little bit of weakness, just a little bit, not a lot of weakness in the American consumer, because if it's hard, if you're maxed out on credit cards and you're getting rejected and you need the thing, or you feel like you need the thing, then you're going to use buy now, pay later, and they're the market leader. So there's kind of a sweet spot, right, where we need the American consumer, we being investors in Affirm, need it to be a little bit, lower on confidence, a little bit stretched, and then everything works out for Affirm. So they're in the sweet spot right now, growing pie, bigger slice of the pie, and looking forward to this one.
Earnings score on this one, Landon, real quick?
Yeah, plus 38 going into this.
Plus 38, so bullish on this one going into results. Bar's actually kind of low. I mean, this stock was trading 82.5 just a couple months ago. So, we'll see what takes place. Great stuff, as always, Landon. Appreciate it.
Thank you.
All right, that's Landon Swan, co-founder of LikeFolio, breaking it down. Kevin, I'll put it to you plainly. I got a kid graduating